Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's refined copper output rose by 3.5% on an annual basis to 860,000 tons in June, according to data released by the National Bureau of Statistics on Friday. The June figure inched up 0.8% from May as production continued to pick up after the coronavirus outbreak, but it was still below the record monthly high of 930,000 tons seen in December. Alumina output in June was at 6.29 million tons, the highest monthly total since August 2019.
Lead inventories in warehouses tracked by the Shanghai Futures Exchange jumped to their highest level since January, while copper stocks rose for their third consecutive week, exchange data showed on Friday. In the week ended July 17, lead stocks in Shanghai Futures Exchange warehouses surged 50% to 40,547 tons, a level unseen since January 10. Copper stocks in Shanghai Futures Exchange warehouses rose 15.5% over the week to 158,647 tons, their highest since May 22. They have climbed 59% in the past 3 weeks but were still less than half of the 2020 peak hit in March. Nickel stockpiles gained 8% to 31,843 tons, their highest since March 6, while aluminium inventories rose 9.2% to 233,327 tons.
Moving on to the top news in the energy sector.
U.S. refineries have sustained fewer mechanical outages as production has fallen because of the coronavirus pandemic in 2020, according to data from Energy Intelligence Service Industrial Info Resources. Average unplanned mechanical maintenance for crude units resulted in 95,000 barrels of capacity offline in April, May and June, compared with 254,000 barrels offline on average in the prior year period. Because of reduced travel caused by the COVID-19 pandemic, U.S. refinery utilization fell from record highs to 68% of 19 million barrels per day in April. Utilization rose to 78.1% by the first week of July. Unexpected refining outages have soared in recent years, surpassing 2,000 incidents in 2019, quadruple 2015 levels.
We will now look at the top news in the agricultural sector.
Brazil's 2020 and 2021 soy production is expected to reach 131.7 million tons, a 5.4% increase over the prior crop year, consultancy Safras and Mercado said on Friday, in its first prediction for the new crop year. Soy planted area is seen reaching 37.8 million hectares for the new growing season, an increase of 1.8% compared to 2019 and 2020, Safras and Mercado said in a statement.
Ukraine's 2020 and 2021 July-June season grain exports remain slow at 719,000 tons so far, versus around 1.7 million tons at the same point a season earlier, the Economy Ministry said on Friday. The exports have included 370,000 tons of corn, 159,000 tons of wheat and 186,000 tons of barley, as of July 17.
Next we have agricultural price moves.
U.S. soybean and corn futures rose on Friday, with soybeans hitting a one-week top as a pickup in export demand for both crops, primarily from China, sparked speculative buying and short covering, analysts said. Soybeans got an additional boost from surging palm and soy oil futures. But forecasts for beneficial rains in the U.S. Midwest capped rallies by supporting expectations for large corn and soy harvests. Wheat futures drifted lower on profit-taking after climbing sharply since late June. Chicago Board of Trade November soybeans settled up 4 cents at $8.95 per bushel after reaching $8.96 minus 1/4, its highest price since July 10. December corn ended up 2 minus 1/4 cents at $3.39 minus 3/4 a bushel, while September wheat fell 1/2 cent to finish at $5.34 minus 3/4 a bushel. For the week, CBOT November soybeans rose 4.25 cents a bushel, or 0.5%. December corn fell 5 cents, or 1.5%, its second straight weekly decline as U.S. crop weather improved, and CBOT September wheat rose 0.75 cents, or 0.1%, to eke out a third straight weekly advance, reflecting fears of tightening global supplies.
We will now take a look at energy price moves.
Oil prices edged lower on Friday as concerns about the surge in coronavirus cases sapping fuel demand while major crude-producing nations ready increases in output. The United States reported at least 75,000 new COVID-19 cases on Thursday, a daily record. Spain and Australia reported their steepest daily jumps in more than 2 months, while cases continued to soar in India and Brazil. Fuel demand has broadly recovered from a 30% drop in April after nations worldwide restricted movements and businesses shuttered. Consumption remains below pre-pandemic levels, however, and fuel purchases are falling again as infections rise. Brent crude futures fell 23 cents a barrel to settle at $43.14 per barrel. U.S. West Texas Intermediate crude fell 16 cents to $40.59. Both contracts were little changed from a week earlier.
Moving on to metal price moves.
London copper fell on Friday, hit by worsening US-China relations and rising coronavirus infections that could dampen global economic recovery and demand for metals. The Trump administration is considering a ban on travel to the United States for all members of the Chinese Communist Party and their families, a person familiar with the matter said on Thursday. The virus has infected more than 13.84 million people globally, with more than 588,000 deaths. 3-month copper on the London Metal Exchange fell 20 cents per cent to $6,426.50 a ton by 07:04 GMT, still up 0.2% on a weekly basis and set for its 9th straight weekly gain. The contract hit its highest in nearly 25 months on Monday.
Next we have the most recent news on the financial market.
The dollar was broadly lower on Friday as the euro rose to just under a 4-month high, with negotiations underway between European Union leaders on a recovery fund that could lift the bloc out of the current recession. The euro was up 0.49% at $1.144 late in the North American session, just off Wednesday's top of $1.145, its highest since the coronavirus financial crash in March. The dollar index, which heavily weights the euro, was 0.36% lower at 95.930. The dollar was also weaker against the yen and the Swiss franc, as a risk-on move diminished appetite for safe haven assets and bolstered U.S. equities.
Finally, we have details on important economic events that will take place in the coming week.
Firstly, the Eurozone flash July PMIs are likely to be the highlight of a very quiet data schedule for major economies in the week ahead. Secondly, in the US, weekly jobless claims will continue to be monitored and economists will mull over housing data such as existing and new home sales, and building permits. Market flash July PMIs will also be released. Thirdly, in Europe, apart from the PMIs due on Friday, Eurozone flash July consumer confidence and current account data will be released this week. The UK has flash PMIs and June retail sales. Lastly, Japan's main releases are nationwide CPI, trade data and flash manufacturing PMI. China has no key data due and the loan prime rate is expected to be left unchanged at the monthly setting on Monday. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.